Israeli lawmakers have taken their first significant step towards approving a controversial plan that would hand the government more power over the country's top court. The city is warning about the potential for a market impact. Simone Foxman has been tracking this story from Doha. So what are the signals that we're getting here in terms of the scale of market risk from judicial, perhaps overreach, some would say?
Well, Citi really putting a number on some of the commentary from the deputy central bank governor earlier this week, who warned that the political uncertainty playing out in Israel is having an impact on the shekel. So Citi predicting that we'll see an 8% drop in the shekel against the U.S. dollar, bringing us to $3.95 to the U.S. dollar. Right now, we're at $3.64. But that's already the weakest level in the shekel since March 2020, a la COVID era. And this even despite a more aggressive rate hikes than we anticipated from the central bank earlier this week. The judicial reform plan, I'll just remind you what this is. It would give the Knesset, the parliament, the ability to overrule some Supreme Court decisions. It would also give them a lot more power over the committee that appoints justices. So the coalition would really have a lot of influence there. Early Tuesday morning, very early, the Knesset, which is led by the Netanyahu government, passed the first round of votes for this judicial reform plan. It has two more to go. However, no signs of a dialogue between the opposition and the Netanyahu government. That is what President Isaac Herzog has been calling for, warning of a constitutional crisis. We expect political uncertainty. Citi says volatility in the shekel and, of course, protests. Thousands of people in the streets in Tel Aviv to continue.
Yeah, it will be something that will be part of our coverage for weeks to come. Simone, passing over to Egypt, they turned to the international debt market for the first time in nearly a year with a debut Sukuk offering. We heard from Doug Bitcoin moments ago. What are you hearing on your side?
Yeah, very strong reception. If you look at the kind of numbers, we saw $5.8 billion of orders for a $1.5 billion Sukuk issuance. And of course, that brought the yield down substantially. The initial prediction was 11.625. We ultimately saw 11%. You know, as attractive as this bond offering Sukuk offering, I should say, was to investors, there are big risks ahead. First off, foreign investors didn't love the fact that the Egyptian central bank left rates on hold. That was a surprise. Also, they were able to pay off about $1.25 billion in refinancing costs that came due yesterday. But Egypt has a huge debt burden ahead. We're looking for the need to refinance about $3.3 billion in terms of debt next year. There are question marks about aid coming from the Gulf, and of course, and that's what you see when you look at the CDS, the risk premium on Egyptian assets, on Egyptian bonds, that remains pretty elevated, if not as exaggerated as we saw just a couple months ago.
Now, Iranian officials implementing new restrictions on foreign currency sales amid the economic crisis. So what are the details on this?
Yeah, so it used to be that Iranian citizens could buy up to 5,000 euros per year. They could trade in their Iranian rials, buy up to 5,000 euros a year. Now the central bank suspending that practice. The only people who can buy euros going forward is going to be limited to people who are traveling, air travelers, and that's just going to be 500 euros from rials this year. This is really as the country struggles with a foreign exchange shortfall. There was a lot of pressure on these sellers of euros as we got near to the end of the Iranian calendar year coming up next month. This is one of the key issues, though, for Iran. We've seen these massive protests, mainly about human rights, women's rights, rights of people in front of the government, but where we haven't, part of the reason maybe we haven't seen more massive protests is people haven't turned out as much to protest the broader economic situation. Is there a point where things get so bad that people ultimately start turning out more in the streets? I think that's the ongoing question that we're going to be paying attention to.